Hey everyone, topic number 3 today is going to be a good one. This is one I've been looking to speak with Greg Dickerson on. How you doing, sir?
Doing good, Michael. Mondays with Michael.
I love that. Hey, so one of the things I wanted to talk to you about is I wanted to review what's going on with Vegas with somebody that's like me that has experience, because what I see happening today in Vegas makes no sense. And I'm trying to figure out what I'm missing. So let me describe what I see going on in Vegas. And let's be clear, folks, all of my data comes from Brian Lebo, who's been a guest on the show once a month. I'm actively reaching out to him right now to schedule this month's episode. But this is what I took. He just posted a video this morning. November, Vegas once again sets record prices. That is the sixth
Wow.
month in a row. Vegas inventory down 26%. All price points are on fire, specifically 500 grand to $1 million. I don't get it, because when you look at Vegas economy, Greg, it's one of the worst states out there. If it's either first or second, Hawaii or Vegas, right? It's a mix, but it's
Yeah.
not good. It's 20% unemployment. It's very services based. I don't get it. And I had to talk to someone who's outside the market, because I'm guessing it all has to do with inventory. And I'm guessing all these forbearance and eviction moratoriums have had a disproportionate impact on Vegas. And people are probably in the programs higher in Vegas than anywhere else. But I don't get, I mean, I was on record in February or March saying Vegas would be in big trouble, but they've had 6 months of gains and I don't get it. So I was just curious what you thought about that.
Yeah. So I mean, obviously it's the hotel casino industry that has taken the hit. And that's where the unemployment's coming from. The question is how many of those are actually owners and not renters?
Ah,
So that's the first thing you got to think about. The second thing is Vegas is, there's been an upward trend in, Arizona and Nevada, over the last 5 years, people really moving into those areas. There's a lot of, tech companies out in that area. So people can live in Vegas and work outside,
yep.
right?
Yeah.
Outside that area. So the jobs and the people that are living in the Vegas, MSA aren't necessarily directly employed by that, casino, hotel,
Mhm.
convention, industry there. So that's another thing. And then the third thing is it's cheap, relative to the area where people are coming from, most likely moving in that direction, probably the Californias, probably the Northeast. I know a lot of people leave the Northeast and move to Vegas and Arizona and those areas, for the climate, among other things. But housing is not that expensive there relative to a lot of markets. In my area, the median house price is, I don't know, 30% more, 20% more than Vegas. Your area is probably double.
Yeah, double or triple. Yeah.
Yeah.
Yeah. So let's break that down, because I think you're on to what it is. Yeah, the owner versus renter is definitely key, right? When you think about, again, the numbers I hear is 20% unemployment.
Mm-hmm.
I think it's fair to say that a decent percentage, maybe call it 60% of that unemployment, are renters.
Mm-hmm.
Again, this is a pure speculation, but I think that's reasonable. The other thing to
Yeah.
realize is, while Brian Liebel just talked single family homes, I've also done research on apartments out there in not November, but September had worse collections on record of any major MSA at 87%. Uh,
Yeah. And I bet you this month they might be leading the
Ooh.
nation.
I think so. And again, what I've seen in my own collection is December has been noticeably
Mhm.
worse, right? I think
Yeah,
people,
it makes sense. I mean, we're going to the holidays. People need money for Christmas, and they're like, you know what? I can skip rent this month. What are they going to do? They're not going to kick me out. They can't.
yeah,
And so people are making that decision. They know that there's help out there. So, this is the time when every nickel counts for a lot of people. But
yeah,
back to the Vegas conversation, I think that's a lot of it. Is there's a lot of renters. There's a lot of people that are taking advantage of the forbearance. They know they're going to be able to work it out. A lot of people have refied. So yes, values are up. Inventory it's record lows everywhere, all across
mhm,
the country. I mean, there's almost nowhere that doesn't have a housing shortage right now.
mhm.
So those things are all factors. I don't think that we are seeing what you could traditionally forecast as a bubble in housing. Not like you're seeing in the markets. There's a bubble in the markets that's gonna boom.
The stock
That is gonna, yeah, the stock market, Bitcoin stock market, gold, all of it, because that's where you can't fight the Fed. That's where everybody's being pushed. that is going to come home to roost, and in a big bad way. Housing, there just isn't any. So, we're fine. Interest rates are so cheap that if you've locked in, it doesn't matter almost what you're paying, because it's gonna average out over the
Yeah.
long haul if you're a long-term owner.
Yeah. And then the other point you brought up that it's definitely true. I mean, you hear it all the time with these YouTube entertainers. They're leaving California and New York because it's high
Mhm.
tax. And that kind of combines with the work from home. I actually put out a video months ago telling the the Nevada governor he should create advertisement saying work from anywhere, live in Vegas, um, or
Yeah.
live in Vegas, work anywhere, something like that, because Vegas, it's got a lot going for it. And there's a lot of great areas. It's not just the Strip, right? Henderson and all these other areas. So I
And
think.
Arizona and Vegas, they were leading the charge
Mhm.
in damage during the 2008-9 housing crunch,
Absolutely.
when all that went down. But they were one of the first ones to start coming back too. So
Hmm.
it's the climate. It's there's a lot of different things going on out there, but a lot of big companies have moved out into that Arizona, Nevada area, tech companies and things like that, especially Arizona. You've got a lot of big tech companies out there.
Yeah. So this is what I'm thinking about Vegas. I'm thinking they're not going to have this horrific crash. They're not going to have an '08 style crash where properties are down 50 or 55%. It's just not going to happen, because right now we're on a race, right? Forbearances expire, right? A full year would be March, I believe, right? March 1st or March 30th, depending on how they count it. By then, we're going to have a percentage of the US vaccinated. It won't be everybody, but it'll be heading in the right direction. And I believe Vegas economy turns once their big convention comes back. That's
Yeah, as soon as
the
people can
market.
go back to Vegas safely, they will.
Oh
And
yeah,
I mean, I'm surprised it's only 20%. You would think it'd be a lot worse.
yeah. So
Unemployment.
that's the big number for me. Is like, okay, if we start getting these vaccines and people get a little bit more confident, and then I don't know what it'll be, CES in the summer or whenever it is, whenever that big conference goes, we're going to hold this thing and it's not going to be virtual this year, and we're going to Vegas. Vegas turns around on a dime because they just need the first
It
one.
will. And, the other thing too is it's going to kind of be like it was this year. So international travel will probably be out of the equation for this year coming, 2021. There probably won't be that much international travel while we're still getting through the pandemic. So people are going to be traveling, locally again. And Vegas is just one of those places that benefits, from a global shutdown. And, I think before they shut Vegas down, they were probably in the uptick. But if you look at all the
Yeah,
resort destinations in the United States, man, they were off the charts,
yeah.
this year, because nobody could travel internationally.
Yeah. And then the other thing we have to realize is there is so much dry powder in big funds.
Hmm.
Even if there is a small discount, they're gonna swarm Vegas. They're gonna
Yeah.
swarm Orlando because they've got to deploy that capital. It's patient, but it won't be there forever. And they're going to take a 10% discount because everybody, including you and I, think Vegas will be back. The question is when? Is it August? Is it December? Is it next? I mean, whenever. They're patient, right? They'll take
Yeah.
a 10% discount, stick a renter. They're even, I couldn't believe this. I read an article, Brian Lebo sent this to me Saturday. There are big hedge funds thinking about doing build to rent in
Hmm.
Vegas.
Yeah.
I mean, I knew about Texas, I knew about some of the, but Vegas. So that just tells you that there is going to be no crash in Vegas. If there is a small hiccup, these funds will just come and buy everything. You agree?
Yeah.
Yeah.
Yeah. Yeah. I mean, there's a shortage. There's going to continue to be a shortage. And yeah, there just aren't enough, there's not enough distress out there to make a dent in the demand.
Yeah. So if you're waiting for I don't know, anything north of 30% in Vegas, I think you're going to be greatly disappointed. Single family homes.
Yeah.
Yeah.
Now that's all interest rates. So if interest rates all of a sudden doubled, yeah,
Yeah.
all bets are off, and
Yeah. All
you'll
bets are
see a big decline. But this is all assuming interest rates are going to maintain where they're at. Maybe get a little lower, maybe go up a little bit. You get over 3% into the 4% range, it's going to shut off like a faucet.
Yeah. So we got you here. That's single family homes. That's kind of Brian Lebo's bailiwick. The other area in Vegas I think is interesting is landlords, multifamily. Again,
Hmm.
87% collection in September. It's probably worse now. I think there's going to be some multifamily assets that come up because again, commercial debt's different than residential debt. And there's going to be some technical defaults and some syndications blow up. And the other thing I think is condo towers, right? Because condo towers like the Palms,
Hmm.
there are so many non-payers that you can't even get a loan on the Palms units now. So I think there are going to be some opportunities. It's just not going to be single family homes. Does that make sense?
Yeah, condo market, that, those always take a hit, but, multifamily is a different animal. When there is no forbearance at scale for those assets. They might let you off the hook a little bit, but
Mm.
they're gonna want you to produce the documentation you produced when you bought it,
Yep.
which said you had reserves, you had income, you had a balance sheet, and they're gonna say, well, where are those assets
Yeah.
now?
Where'd it go?
Yeah. And if you can't show, what happened and why, then, then you have triggered a technical default. And I saw one of your viewers put a comment, why would a lender ever want to trigger technical default or call a loan,
Yep.
on a performing asset, as long as the payments are being made and all that? Why would they want to just take it and just call it, in technical default for whatever reason? And, that puts that lender in position, to you just never know where that lender is and what position they're in.
Mhm.
And, it puts them in the driver's seat to be able to do whatever they want with that loan and get it off their books if they want to.
Yeah. Yeah. Again, I'm very confident now that the single family home market across the country is going to be up. I actually spoke with somebody from John Burns Real Estate Consulting last week. They agreed, although I was more bullish than them. He said 8, I said 10. So no decline in single family, but multifamily, those interest only notes, I think, are going to come back and bite some people, as they were going to flip from IO to full principal and interest. It's there's going to be pain, but I think it's very focused on commercial this go around.
Yeah, we'll see how it goes. I mean, the interesting thing about that too is whenever those issues pop up, the lenders and the lenders representatives know who to call to take those
Mhm.
assets over. So
Exactly.
a lot of the real distress will get avoided because they know who they can call that will step in and take the assets over, and they can just walk right into the loan and
Oh
just
yeah,
assume it.
it'll
Now,
just yeah. Go ahead.
here's what happens: all the equity investors gone, they get
Gone.
wiped out.
That's
Yeah.
exactly what I was going to say. Yeah, if you're sitting in an equity position, you're in technical default, and they find a stronger operator, or they cleaned up their books, your equity's gone, just gone. Yeah. All right, man. Well, this has been fun. Always fun speaking with you. Thank you for your time today.
Yeah, enjoyed it.
Thank you, buddy.